BQ Prime. I am Hersh Sayta. We stick with the discussion with regard to risk-weighted assets and RBI's views that the governor also voiced on Wednesday with regard to risk-weighted assets. And we have with us a letter from the Finance Industry Development Council with regard to their views on how NBFCs and the risk-weighted assets increase with regard to the NBFC sector as a whole may actually be a big drag not only to the sector but to MSME lending, and that may get impacted. We're here to try and dissect that and some of those views further. We have with us Mr. Raman Aggarwal, who's the director at FIDC. Good morning, Mr. Raman. So, sir, trying to dissect this further, right? Whether this tweak in risk-weighted assets, which is intended to be a nudge, is it actually a nudge or a shove? What exactly, in your view, has played out here with regard to NBFCs? What's the FIDC's viewpoint?
Thank you for having me on the show. And first of all, see, while we fully appreciate the concern which you mentioned in your opening remarks that the Honorable Governor had been voicing, there is a sudden spurt in the unsecured consumer loans books for both banks and NBFCs. Although we also need to keep in mind that a very substantial part of this comes from this whole business of digital lending. Ever since digital lending has really caught up in the system, there, I think vast majority, in fact, would not be wrong to say more than 90% of these loans are all small ticket consumer loans, which are given personal loans. So having said that, while RBI's concern to that extent was valid that yes, there is a sudden increase, so a word of caution was what we also got when we met the governor some time back. However, when the circular came, the increase in risk weightage on the lending side was fine and it was done across the board, and rightfully so. The important element was that the secured loans and other loans given for business and commercial purposes, for example, MSME loans, and even for housing loans or even vehicle loans, commercial vehicle loans, all these were education loans were exempted, and rightly so, because the target segment here is those unsecured personal consumer loans given, and that is where the segment was. But what it panned out, and the way the circular has been worded, unfortunately, the second part where it says that the risk weight on all bank lending to NBFCs will be henceforth increased by 25%. Now, first of all, there are two aspects to it. One, the increase we feel is quite high because it's 25% over and above the current risk weight. So if a AAA rated NBFC has a risk weight of say 20, now it becomes 45. Because earlier there was a school of thought that it will be 25% of 20. No, it's over and above. So 20 becomes 45 and 50 becomes 75, whereas the lower rated ones which were rated as 100, for them the risk weight will remain 100. So that's first part. But the second part, which is really, I think we at FIDC feel is really going to hit hard, not only NBFCs, but the entire lending. Because when you say that the all bank lending to NBFCs henceforth will enjoy an increased risk weight of 25%, so what you are literally saying is that henceforth all bank lending to NBFCs, one, becomes restricted because already there is a very large chunk of bank exposure to NBFCs, and increase in risk weight would mean that bank would need that much amount of additional capital. And secondly, more importantly, the cost of borrowing for NBFCs goes up. And this is across the board. So for us, the cost of borrowing on our liability side goes up for all kinds of funds which we raise from banks. Now, what we have said to RBI in this letter is that while RBI's intention is very clear, it has been said that the segment of loans which is to be checked and for where the risk perception is high is only that unsecured consumer loans. So not the MSME loans or the ones given for business purposes, like even the vehicle loans or the secured loans like vehicle loans, housing loans, educational loans, those are exempted. But when you, on the borrowing side, when all our bank borrowing for NBFCs from banks will henceforth be increased, obviously cost that will have an impact even on the MSME loans, even on the secured loans. So our request to the RBI has been that please let us monitor the end use. So only those funds which are used for on lending to the unsecured consumer loans should only for that segment the risk weight should be increased on our borrowing side also, not across the board. Because
Understood.
if you do it across the board, it will impact the entire lending business.
Right, sir. So, sorry for interrupting, but just trying to
Yeah.
break this down slightly more in granularity, right? So, let me first start off with trying to understand what the impact of this is going to be on overall NBFC growth, as well as what you believe is going to be the impact on cost of funds for NBFCs.
So, see, first of all, let me tell you in terms of growth, see, because there is absolutely no concern as far as the capital adequacy is concerned.
Correct.
Because RBI data, RBI reports have time and again shown that the average capital adequacy ratio for NBFC sector is around 20% as against the prescribed 15.
Right.
So, in terms of capital, there is absolutely no concern. And as I said, on the lending side, it may not hit. Yes, I mean the cost of, I mean the lending rates will go up for unsecured consumer loans, but that's fine. That's okay. But what is going to impact is on the borrowing side. So there we are worried that while suddenly the cost will go up. Now we still need to see how much and by how much the banks will increase, because that all depends the call which banks take. And to our understanding, I think perhaps banks are in the process of gauging what is the going to be impact. I even read some reports saying that banks may need an additional capital of 84,000 crores to first is the increase in risk weight. So how will this play out in terms of the quantum of bank borrowing to NBFCs and the cost is still to be watched. Whatever increase we see in our borrowing cost, commensurately there will be an increase in our lending rates. So that you will have, it is going to be a direct correlation to how much the banks are going to increase the rates. That is where the rates will go up. Obviously, let's face it, yes, the rates will go up. Certainly will go up. Because
Understood.
the risk weight for all bank lending is increasing now.
Right, right. And, I think one of the key pieces or intent of the increase in RWA with regard to where NBFCs are concerned was also with regard to interconnectedness. That NBFCs are over reliant on banks for the purpose of their funds. How much is that the case, and is that at all a concern in your view?
See, if I may tell you, in fact, that we at FIDC have been voicing this concern also. If you read our pre-budget memorandum, and I have myself been representing FIDC in the pre-budget meetings, in fact, we have been requesting to government and RBI that this over-dependence of NBFCs on banks needs to be checked in the longer run. But that does not mean that you just stop it. You have to give us an alternative. After all, NBFCs also need funds to grow, na? And we are seeing that the contribution of NBFCs in the entire lending, especially MSME lending, is in fact the share is increasing as compared to banks as we're going ahead. So NBFCs also needs funds. So the idea here is to open up new avenues of funding. And we have been requesting the government and the RBI to create a refinance window for NBFCs. I think that is something which has been in the pipeline for quite some time. And we have even gone to the extent that maybe, institutions like SIDBI or NABARD can play this role of acting as a refinancing body to NBFCs. That will, one, reduce the over-dependence on banks. Two, it will also give a direct leeway and handle to the government to intervene. See, today, whatever measures are taken are routed through the banks. So whatever funding or whether, even in COVID times when there was certain extra benefits of stimulus given, the entire TLTRO or the partial credit guarantee scheme, all that funding was always routed through banks. And it was ultimately led to the whims and fancies of the banks. And banks took a judicial call depending on the situation, the risk perception, and somewhere they felt, okay, if the risk perception is high, they withdraw. So that situation should not arise. We have been in fact saying that give us a refinance window so we are not over dependent on banks. That certainly is an aspect which needs to be handled, but not with one-sided view that you just restrict the bank lending. Simultaneously, an alternative source of funding like a refinance window needs to be opened up and done immediately on this front. As I said, this thought has been there in the pipeline for quite some time.
Right, and so absolutely point taken. So is there in some form or shape, what is the level of concentration risk at the moment? Is it, would you say it's moderate? Would you say it's low? Would you say it's high? What is the concentration risk like currently, given the system?
See, I would put it at a moderate risk. You cannot take it, I would not say very low, because the quantum is high. Yeah,
correct.
But at the same time, the risk is not high because, as I said, the sector today, if you look at it, we've had stray cases. I mean, the last we heard was the ILFS and DHFL and then Shrey going down. Otherwise, we've seen NBFCs performing very well, and the figures have shown, in fact, and as I said, the NBFC sector is quite well capitalized. The asset quality is robust because the prudential norms have now been harmonized with that of banks, so there is no so-called regulatory arbitrage left there. So the asset quality is pretty high, and all other norms, in fact, the NBFCs in the upper layer today are being regulated like banks. So I think to that extent, the risk is moderate. It's not there, but in the long run, yes, this has to be ensured that funding avenues for NBFCs need to be diversified. Let us not be only dependent on the banks and capital, because let's appreciate capital market is again something which only the higher rated ones and the large NBFCs can tap. You cannot expect a very large number of small NBFCs to tap the capital market. That's not feasible. So even for them, refinance window is the real answer.
Sure, understood, got it. And so, there's one more piece which the RBI governor has commented upon. What he suggested is that the rate setting by especially by the micro lenders, is that at all a concern? Because they enjoy slightly higher margins, is what he suggested, than what has historically been the benchmark. So how should one look at this? So if the way I really want you to help us understand is, if in any case margins are better than what they have been historically, is there in any case a case for a change in risk weights and therefore cost of funds going up, not really diluting margins but actually bringing them down to real levels?
See, if you ask me, I will put it, and that's how we take it. We take the word and the advice given by the Honorable Governor as a word of caution. Yes, I mean, and as a regulator, I think that's a very prudent step to take. When obviously, it's common sense. All wrongdoings or undesirable things when things are looking very good. And then things start taking an ugly shape. So it was a preemptive measure which RBI has taken. To that extent, it's taken well and fine. But as regards to if somebody says that the margins have suddenly gone up, I think that if at all there is a increase, first of all, there is no such very significant increase. Whatever increase, if there is in the margins, I would say is more because of the better asset quality rather than the lending rates going up. It's because the collections, the recoveries are good, and NBFCs are known to be better, recovery masters, and that's where this entire model of co-lending took shape, because everybody recognizes NBFC's ability to recover. So I think it's more to do because the economy is doing well. It's growing, and so are the small-time MSMEs and the borrowers, since the business is doing well as of now. So the delinquency levels are very low, and that is where I think you see the margins going up. It's not because simply somebody has really increased interest over there. So no. So I think to that extent we take it as a word of caution, but I don't think there is anything to be really worried or panicked about. It's not system driven and market driven. Nobody can afford to charge any market rates, interest rates which are totally out of sync with the market. You will be totally outclassed by the competition in the market. The competition is so fierce, and with this new age digital lenders keep coming in, I mean the competition is getting fiercer, and I would say fiercer and healthier. So we take it that way. So I don't think there is a case for anybody to overnightly unscrupulously increase interest rates, because if somebody does go, that's a very I would say a bad business decision. rather than anything else.
Sure. And so what will be the impact in your view? Of course, you said growth will remain unaffected. That's something you've mentioned. But what will be the impact on the consumer? So will some of these rates be passed on in your view while you are talking to some players? Will it be passed on to the final consumer?
Yes.
And what will be the sectors which will get most impacted by this?
See, so first of all, let's appreciate when it comes to consumer loans, the unsecured consumer loans, that definitely across the board, whether he is a bank borrower, somebody is a bank borrower or is an NBFC borrower, the rates are going up for sure. Let's take it. In fact, now the question is that in case of an NBFC borrower, the rates will also be increased for other lenders, for other borrowers, the MSME borrowers or the secured borrowers like auto, somebody buying for a car loan or a two-wheeler loan or even an education loan.
Yes.
So there, yes, the increase will be there. But as I said, that will all depend on how much our borrowing cost goes up. If as I said, the business is otherwise, as of now, things are looking good and business is doing well. If at all the banks take a call not to increase the rates significantly, there may be a case for some good one, well-run NBFCs to absorb that and not pass that. So as I said, that will all depend on how much the banks will increase. So we are all, it's a wait and watch mode and very eagerly waiting. While on the other hand, that's why we immediately sent this letter to RBI requesting that please have a relook, because I think it's more of a oversight perhaps maybe that the NBFC borrowing rates have also been increased across the board. So that will, I think, it was nobody's intention to make MSME lending or secured lending costlier and dearer. So I think we have a case there, and we are hopeful that there will be a proper justice done, and we may see some changes going ahead.
Sure, very, very interesting inflection point. Thank you, Mr. Raman, for breaking all of this down for us, giving us that NBFC perspective, a perspective which,
as a last word, I would say, just sorry to interrupt you, that we at NBFCs not only recognize but are committed, absolutely committed to supporting and developing MSMEs in the country, because we fully believe in this whole idea of an Atmanirbhar Bharat, which has to come up from the new age entrepreneurs, the young generation, the startups, and that is where NBFCs are there, and the figures are telling that there. So, in fact, we are eager that we are given leeway to act more freely and go ahead and do this kind of secured lending. Concerns on the unsecured consumer loans, well taken.
Understood. Fully understood. That's the position coming in from the FIDC, of course. We had the director here, Mr. Raman, who's spoken to us largely, of course, impact with regard to loan growth as well as cost of funds yet to really play out. So no real quantification coming in over there on what that impact will be. From a funding standpoint, capital adequacy, well capitalized, no issues there. Concentration risk, a moderate bit of a challenge there and there has to be more sources of funds, which really is the ask from the FIDC on behalf of NBFCs. But very interesting inflection point, and it's been great chatting with you, sir. Thanks so much for that perspective.